Hi, Carlos Quintana, CFO of Quint Services here. Today's video is very special. This video wasn't planned. This video was shot, the camera kept rolling after we had finished shooting a video. And we found out that this video is very valuable to freelancers and self-employed individuals because the answer I give in this video saves them thousands of dollars in taxes at the end of the year. So if you're interested in this, you want to save thousands of dollars at the end of the year in your taxes. If you're self-employed or a freelancer, stay tuned. So what was your question, Brian? You said something about like saving more taxes, but you're a freelancer, right?
Yeah.
So you want to know like how you can like reduce your tax liability?
Yeah, as a freelancer.
Basically for you, one of the major expenses that you're going to have is going to be your taxes. So for you to save more money and stay protected, you would have to incorporate, that's one suggestion, incorporating your business. So you could, if you want to keep your name, let's say Brian, and you want to do like Brian Inc. or Brian LLC, you could do so, and then for people to actually pay you to your name. That's in case you don't want a company's name. But the reason why I say that you should incorporate or create an LLC is because each one of those entities has an opportunity to reduce your taxes. So for example, right now you're self-employed, you're a freelancer, you're being taxed as a self-employed person. You're paying taxes, of that income that you're earning. But you're also paying the self-employment taxes. That means that you're paying a certain percentage extra than just your income taxes. Let's say that at self-employment, it's also an entity. You're not an entity, you're a person, but let's say that there's three kinds of entities, just to give you an example. There is a self-employment, there is a general corporation, and there is an LLC, right? A general corporation is what you would know as of a C corporation or an S corporation. Yeah? So a general corporation basically is a state entity, and then you can be taxed as any of those two, a C corporation or an S corporation. An LLC is a state entity, which is a limited liability company. So the LLC has more flexibility on the ways that you could be taxed. And there is you, a sole proprietorship. It's a freelancer. Now each one of them will have a different treatment. So let's say that you decide to do Brian Romo LLC because you don't want to create like a whole new brand. People already know you, Brian Romo. So you create, let's say, Brian Romo LLC, and you decide to be taxed as an S corporation. My recommendation for people that that have a business, their business should be taxed as an S corporation. C corporations should only be used for investments or other shelters. So C corporations are very useful. However, to use it as your primary business, you see things like double taxation. You get taxed as a corporation and you get taxed also as a shareholder. Okay, so that's what it's you shouldn't be afraid of double taxation because there's different tricks that you could use as a C corporation. Like for example, myself, in my businesses, I create an S corporation, but it's an LLC or a general corporation being taxed as an S corp. And then the S corporation, once I do my taxes personally, that income is taxed through me, through my ordinary, through my tax bracket personally. So the corporation doesn't pay any taxes or anything like that. Who pays the taxes is me, on my tax bracket. So the entity itself doesn't pay taxes, only pays the state taxes. With a C corporation, the corporation pays taxes, and then it pays also, as a shareholder, as you personally, you also have to pay the taxes on that income, or the profits. I would recommend for you to do like an entity, get taxed as an S corporation. The IRS recommends for you to assign yourself a salary, and it has to be reasonable. But let's say that your profits are really little right now. Let's say that you have income, and then you have all the expenses that you have. Your cameras, microphones, whatever it is that you need expenses. So you have your whole revenue minus your expenses, you're going to be left with a little profit. That profit is going to be taxed through your income taxes, your personal income taxes. But you don't pay self-employment tax anymore because you're not declaring any cash that came in through you, but the entity itself. And the entity doesn't pay any taxes on the revenue or the profits. So you would save some money there by not paying self-employment taxes. And for the moment that you can't afford payroll, let's say for you to assign yourself a salary because you're not making enough money to actually assign yourself a salary, you could just go ahead and distribute the rest of the profits as in your taxes would be called distribution other than dividends in your taxes. You could distribute that to you as a person, and then you just pay the taxes of the profits. So that'll be one way for you to save some money. In your case, since I've seen your numbers, you could probably save around like $2,000 to $3,000 in just 1 year by doing this entity itself. California charges a minimum of $800 for entities, any kind of entity, LLC, general corporations, whatever. Like there's ways to, for your first year, not to pay the $800 on the first year. The rest of the years you have to pay those $800. But that's even if you have to pay the $800 for California, you save a lot more by not paying the self-employment taxes. You know, you see what I'm saying? So that's one way that you could save, which is by incorporating, whether it's going to be a general corporation or an LLC. Plus, you stay protected. It has limited liability. If you get sued, you don't get sued as your person. They cannot go after your personal assets. They could only go after the assets of the corporation. I would use like an LLC, tax as a C corporation, you know, to put in some of the investments that I have in there. Or something like that, you know. It doesn't necessarily have to be that way, but every person is gonna change. Every person is very specific.
Different situations.
Different situations. Okay.